Hi, my name is John Lennox. I'm the manager of Sofa Doctor in Auckland. We're a mobile upholstery company. We do work for most of the major retailers doing furniture repairs and servicing, everything from upholstery to leather recolouring and leather restoration. The whole purpose of our company is to basically cover every square inch in New Zealand. We approached a financial advisor that we trust and we've used in the past, and he strongly suggested we use Prospa. The reason why we ended up using a bank and went to Prospa in the first place was based on time. For any small business owner, it's all about time management. We did approach our bank. They wanted a business plan. We approached Prospa. They were able to basically sort everything within 24 hours, and that's what us small business owners need. We originally got our first loan to expand our company into Hamilton. We wanted to expand as quickly as we could, and this gave us the facility to basically move forward. We were so happy with Prospa during the first process, we ended up using them again. This time was due to COVID. We were unsure of how COVID was going to affect our company moving forward. We wanted to make sure we had enough cash flow. We were uncertain of how the market was going to react and how our business was going to react. The financial backing from Prospa gave our business peace of mind and gave our staff peace of mind so we could move forward during an incredibly difficult situation. It enabled our company to continue on the way we would have been if COVID never hit at all. The uncertainty of 2020 was pretty heavy for most small business owners. Luckily enough for us, through the support from Prospa, we've actually been able to employ more staff and cover more areas.
Hello everyone, my name is Amit. I'm the General Manager for RFI Group out of the Asia office. I've got the Prospa team here speaking to them about the SME landscape in New Zealand. We'll be talking about all things related to the economic environment, what this means for SMEs, and getting into what Prospa's been doing in the market. Very exciting topic to go through. I'll let the team introduce themselves, and then after that, we'll kick off with the questions.
Yeah, thanks for that. Thanks for that. Thanks RFI for having us at this event. I'm Adrienne Bigby. I'm from Prospa. I'm the Managing Director for Prospa and have been here for 2.5 years.
Hi, I'm Huia and I'm Adrienne's BDM, so I've been with the business also for 2 years.
Okay, thank you both. Great to speak to you both today. I'm very excited to get your thoughts on what's happening in the market and also the specific topic areas around SMEs and their behaviours and kind of what we expect to see going forward, in a post-COVID environment. So I wanted to kick things off by firstly talking about the overarching story, which is the impact of COVID on SMEs. What do you see going forward in terms of the recovery, and what are the key things they're going to need support on going forward?
Yeah, that's a good question. And the pandemic, so it's been a crazy time when we sit back and think about it. It's been quite surreal. We were very fortunate as a business to help all of our customers through this time. We were in a good position from a business cash position ourselves to be able to help them. So every customer of ours was sitting on the couch, the same as ours. So in the peak of the pandemic, we had a good 7-8 weeks that we couldn't work, but neither could our customers, and that's our core business. So we don't do mortgages, we don't do investment, we just do small business lending. That's what we do. So every single one of our customers through this time that couldn't pay, that needed deferrals, that needed their terms pushed out and everything, we were able to do, which was awesome. And it was really exciting to be able to come through that. And what we've seen after going through that is our customers have come back online very fast. So small businesses have managed to get back to business. The COVID experience in New Zealand has been unique compared to the rest of the world, as we know, and they were managed to get back to business. And really since October last year, we have been in a position to continue to help customers lend. We didn't stop lending through the pandemic. We did continue to lend, but really it was the confidence, and businesses weren't looking for lending because they were just looking at surviving during that time. But what we've seen is since October, they've come back online, and they've come back online very fast. So what they're looking for support is, they're looking for funding from us. We can see month-on-month growth and what they're doing. And it's not just for cash flow, it's for growth opportunities, and we'll talk about some scenarios later on. But interestingly, we also do a regular survey. We do a pulse survey with small businesses, not just our customers. We do a nationwide one, and we've just done one with YouGov that was just published at the end of May. And in that, so during COVID, we had I'm just reading some stats now. we had 45% of our small businesses, or these small businesses, sought advice from other businesses and other sources. So they were always looking for support. So that's what they were looking for. And then during that time, what they really found was that community support. So I think we've all been focused on shopping local and being local and doing that and really making it very New Zealand. And we really saw that come out in our survey and from the feedback that we've had from our customers.
Yeah, fantastic. No, that's really a positive story at the moment in many ways. I know that in 2020 things were in the doldrums in many ways, but it is exciting to see things starting to pick up and move forward a bit in terms of the economic environment and SMEs as well. I guess as a follow-up to that question, in terms of the various sectors that you see out there, where do you kind of see more growth at the moment? You mentioned that growth's been picking up since back end of last year, but are there any kind of major differentials across industries that you're seeing in terms of activity?
Yeah, absolutely. I think we're all seeing it when we look at all the economist updates and leader updates that are happening in the economy. But absolutely, there's some ones that have come online very fast, much more than others. So, and they're really in the fast industries are the construction, so builders, people that are actually been sitting at home looking at their house and wanting to put in a spa pool or have something else or a new office or something at home. So we're seeing those come online very fast. Again, Huia will talk to some scenarios, but then the ones that are probably lagging are the tourism industries. So we have seen some of those have been a bit slower about coming back to us for lending. But again, they are coming back in. So we are seeing them now. So the way that we lend, we look at real-time data, so we can actually look at the performance and the behaviours of businesses and see what they're doing. And when we're looking at those businesses, we can actually see what they're doing. So Huia, do you want to talk about some of the deals that we're seeing?
Yeah, definitely. I looked at our latest settlements actually, and I went through and just looked at some of the different businesses that are coming in based on our settlements. So I'm just going to yell out some of those industries. So we've got people in audiovisual, a film props maker, a takeaway pizza store, an interior designer, a large plumbing supplier, a small cafe in the suburbs, a commercial installation business, an IT business that work in education. We had an HR business come into us for funding also. Our windscreen guy, like your local windscreen guy, has come in to purchase materials and pay his suppliers. We've had a huge transport logistics business, so that business has over 100 trucks in its fleet. A seafood exporter, carpenter, a scaffolding business, and a locksmith that owns 4 different stores. So that's just a range of some of our settlements that I've looked at and gone down. So we're seeing loads of business come in for funding, and talking to hospitality, where some other lenders might find or think that it's high risk. We don't really look at our business like that. We look at every business individually, and we talk to it later. I suppose we'll end up talking to it, but our credit decision engine and our API, our technology and all that helps us use real-time data to be able to look at each business individually and not kind of limit them because of a particular industry that everyone might think is a high risk or not a safe one to lend to.
Cool. I mean, that topic of around the use of data and really non-conventional data and an on-the-ground understanding of businesses, I think, is really important, and that's where I think Prospa's got a lot of advantages versus some of the bigger banks, because you're on the ground floor, you're looking at different sets of data, you're speaking to customers more directly, and it seems like you've got more kind of intimate relationships with customers, which I think is really critical in terms of the current period where SMEs are moving on from a period of struggle towards, I guess, a recovery in their activity. I mean, related to that, and I wanted to, I guess, look forward and think about business behavior. We know that from some of our RFI statistics, we are seeing changes in the way SMEs are behaving, especially with regard to digital behaviors. A lot of them are using digital tools a lot more often. They're reliant not just on that from banks, but also from non-banks as well, like really keen to use data, digital tools in order to do their business in a quicker and easier manner. So I wanted to get both of your thoughts on that. What sorts of behaviours are you seeing shifting in the post-pandemic world for businesses, and which one of those do you think will kind of continue on, and which ones were more temporary in nature in your view?
Yeah, it's a really good point. And I think the digital adoption it's not a new thing. So this was already happening pre-pandemic. So people are, it's how we look at anything that we look to buy. So whether people were before buying online or just researching and then going and buying it at a store, or then going to the bank. But I think most of the work that we do today as a society, we do online. So I think that was already happening. But what I think the pandemic had is really speed that up. So where it might have been happening before, I don't know the percentages, but say 40%, we might be at 80% today, where people are more and more confident about buying online, shopping online, lending online, and that trust factor. So there's a lot of trust, and our business. So we're a digital online lender, but we've done over $2 billion worth of lending. So that's with Australia and New Zealand together. So that's a lot of lending and a lot of small businesses, when our average loan size is only about 35,000. So we've touched a lot of business and have worked with them. And the way that we lend, we do it all digitally. So we look at the client's bank account. We have a digital credit decision engine that will make that decision. We do the AML online. So everything is done online, which enables us to make really quick decisions and go back to the client really fast. So I think that adoption, and just look at our own behaviour. How many people when we were all on our cash supermarket, we did it all online, and you see couriers a lot more nowadays delivering wine and food and everything that we do it online. So it's extraordinary. So I think it's just sped it up. I think it's sped up those requirements.
Yeah, I'll add to that too. And I mean, when we look at our data, so, Auckland's had 4 level 3 lockdowns. There was the original one and then 3 snap lockdowns later. So when we look at the business that we've been able to help through that time in terms of assessing the business and their sales, whether, and working out whether we can lend to them, there's been 4 level 3 lockdowns. When they come back online, we could see, looking back over the 12 months, for the first level 3 lockdown business, we're trading at about 50% capacity. And then when we look at the 3 snap lockdowns, we can see that that business has been able to figure out how to get their product out to more people, regardless of the level of lockdown. And we can see that they were trading at 85 to 90% capacity in the 2nd, 3rd and 4th snap lockdowns. So whether they invested in their business and partnered with other business to get their products out there, to more people, or they went online and organised click and collects, or they renovated their business so they could have a little window shop at the front to serve customers without having people enter their store, whatever it was. It's amazing. And we can see that in that data.
Yeah, I mean, it's very interesting to look at those case studies of specific examples of how businesses adapted. I know we talk about sort of broad trends in the market in terms of e-commerce and more businesses kind of trying to go direct to customers through that e-commerce model. But really interesting to get your thoughts on that. And I guess in terms of thinking through this, in terms of Prospa more specifically, everyone's had to adapt and drive through this period of lots of changes in terms of the economic environment. Before the pandemic, from a lender's perspective, and especially one that lends online and to SMEs, there's a lot of talk about whether a business like Prospa would be able to deliver and sustain through a period of an economic downturn. I think that was a real test of your business model, and it seems like you've kind of thrived and managed to go through that period really well. So I wanted to explore, like, what are the key reasons behind that? What do you think was behind your ability and capabilities in terms of getting through this quite a tough period over the last couple of years?
Yeah, that's an interesting point. I'll go first, Huia.
Yeah.
Whether there was questions whether we could survive or get through it, I don't know. That I never heard that. I think a lot of us, that was a scary period. So going through the actual lockdown, I think there was a lot of businesses that were, including our customers, that didn't know the future. So I think it was a scary period for everyone. But thankfully, as a business, Prospa was in a position that we had a good cash position to be able to get through it. we worked with, and I'll let Huia talk about more of the internal perspective on how we got through it. But we were in a position that we could financially afford to work with every customer. So when you put a customer on deferral or interest only or whatever you do to their payments, that has a capital implication to the business. So we were in a strong position to be able to get through that and work with every single customer, and we did. So the feedback that we've had from customers is just extraordinary. And then coming out of that, so Prospa was founded, we started because of the lack of ability for people in small businesses to get lending. So that was a pre-pandemic need, and it's a post-pandemic need. So our customers are still looking for lending, and traditional lenders in these kind of periods, I've been through the GFC as well, but traditional lenders going through a cycle tend to get quite risk averse, and they just batten down the hatches. And we all know what's happening in the housing market, so that's just gone crazy, and people are focused on that. Traditional lenders are focused on that, as are a lot of advisors. So these small businesses are looking for funding to be able to grow, survive, triple their businesses in some cases. You just mentioned the digitisation as we discussed that, so it made me think of one of our customers that we had. And this was really just coming out of the pandemic, coming out of the lockdown, so it would have been October, November. This is a retail provider in one of the tourist towns, so one of our big tourist towns. And they were, there's no tourists, so they were really struggling. So they came to us, they invested $100,000 to go online, and now they're global. So they're selling their goods online globally because they pivoted, for want of a better word. I know we all hate that after this last year, but they managed to do that. So that need hasn't gone away. That need was there pre-pandemic, and that need is much more so now post-pandemic. So Huia, do you want to talk about what we did as a business internally?
Yeah, definitely. I really, you touched on it. We had the great cash position to be able to actually help every single customer that come into us that needed to defer their payments or, reduce their payments for a certain amount of time. But for me in sales, it was really interesting because obviously for a time being, we weren't doing any sales, but we were trained and we picked up the phone and we talked to every single customer that we had. So that was amazing too. So we got trained in that space, and also found out about our policy with regard to being able to help our customers when they get into a position where they might need to reduce their payments or defer their payments. And our policy in that sense was already excellent beforehand. So it was great to be able to talk to business owners to be able to let them know how we could help them. And our whole business did it. From my perspective as well, when I look at our executive team and I talk about Adrienne and also our founders and everyone in our executive, they were picking up the phone and they were talking directly to our partners and also to customers, which was brilliant. And they all, in terms of our HR team and again, the executive, they communicated to all of us, the whole staff. We had weekly updates. We could ask the CEO and our managers anything, and they just kept us in the loop with all the decisions that the business was making. So I think that gave us confidence within the business that we were really being looked after and kept us all connected as well, which helped, I suppose, staff morale through the whole period when we didn't know, or no one knew what was going to happen or how we were going to come out of it. So I think those things were brilliant from a business perspective. Yeah.
Yeah, no, really interesting to hear those, internal developments and yeah, I can see why, being positive through that period, and the companies that have come out stronger were the ones that remained positive and really invested in their staff and in their customers as well, and looking positive now as things recover. I guess on the topic of recovery again, but then and forward looking as well, I'm trying to be look towards the future in terms of innovation, in terms of lending and online lending particularly. I think that you raised the point earlier about there's still a lot of aversion to lending to small businesses amongst the traditional lenders. And I was looking at some Reserve Bank statistics around proportion of businesses that have been rejected for credit or feel like they can't get access to financing. They're still very high and maybe even increased during the pandemic period. And of course, we know that businesses are looking for things like quick turnaround times and a really seamless experience when it comes to online lending. I wanted to get your thoughts on that topic around where do you think the innovation is going to come from in terms of SME lending? Is it around the application experience? Is it around turnaround times? Is it around the channel experience customers have? What do you think is going to turn out?
I think the innovation, I think that's where our business came from. So, you talk about the high decline rates, and it is just a fact. It's just not the traditional bank's core business and their core expertise. So our founder story, so where we actually came from. So we're 9 years old in Australia, so 2.5 years old in New Zealand. And our co-founders are still in the business. So our CEO, Greg, and our CFO, Chief Revenue Officer, actually, Bo. So both co-founders, they were both business owners. They were both trying to find funding for their business. At that time, they were early 30s, and we've actually got some stats from our survey talking about younger business owners that may not have security, may not have houses, trying to get business lending, and we know that's tough. We hear it all the time. So the younger businesses, if they haven't got a security or they haven't got a house to put up or a second mortgage or a caveat, it's difficult to get unsecured lending, and that's essentially what we do. So they were looking for funding, couldn't find it. So one of them was importing clothing from overseas and selling it in Australia, and the other one was in equipment and looking for funding, and they just couldn't. They'd struggled, and they just went, there's got to be a better way to do this. So they got together with some investors and set up Prospa. And as I said, we've now done over $2 billion worth of lending. So we're all online, we're all digital, we're all real time. So essentially we can have a business that can come into us, and they're time poor, as you've said. So they can come into us, and within 10 minutes, we can tell them whether we can lend to them or not. We can tell them how much we can lend them. And then within 24 hours, we can draw that down. So we do digital documents, we send that to them, and within 24 hours, but often same day. So then the feedback that we have from customers is like, oh my goodness, like they're just flabbergasted with what they can see. I come out of mortgages. Huia and I were both in mortgages before. Prior to that, I was in insurance, and I've never seen tools. And that's really why I came over to Prospa, due to our technology and ability to make these decisions and to help these customers. So our innovation as a business is why we're here, but also future innovation is really about listening to those customers. Because we're a fintech, we're quite nimble and we can move based on customers' needs. So in New Zealand, we have a small business loan. We were fortunate enough to get access to the government guarantee scheme, which has enabled us to be able to reach more lenders. So we've had that month-on-month growth, but a lot of that has also been under the government guarantee scheme. And it's helped us to identify a whole segment of business that we weren't reaching before. So this is the larger loan sizes. We lend from 5,000 up to 300,000 in New Zealand. And then 70% of those customers come back again for more funding because they have a great experience and we work with them on their businesses. So that innovation for us is really around evolving our business based on their needs. We as a business are looking at line of credit and other products that we can bring here, which is really what they're looking for. I think in some of your research that we've done with RFI, it's about flexibility. It's about people being able to own their own destiny when it comes to managing their accounts and their lending. So that's what they're looking for. So that's what we do.
Yeah, interesting point around the customer expectations around this. I think what we see from our research is we know that businesses and SMEs the owners are very busy, and the staff are always busy, and they don't really want to be thinking about banking and finance all the time. It just needs to be almost like a seamless process in terms of how you get access to financing, how you do your banking. So yeah, I think you're really in the right direction in terms of making things quicker, making things more seamless and part of their sort of everyday workings, and making it so that they don't even need to dedicate much time to think about financing and banking. And you kind of touched on this in terms of the use of data. We were talking about this earlier in terms of how Prospa especially utilizes customer data in order to tap into segments of businesses that perhaps not reached by traditional institutions. So I wanted to explore that topic a bit more and get your thoughts on how do you look at data, what sort of customer data you tend to look at, and then when it comes to your credit decisioning as well, I guess you can kind of link the two together. How do you look at the whole model, and what sets you apart there? It'd be interesting to get a perspective on that.
Yeah, do you want to talk about the credit decision engine on that and what the actual process is?
Yeah, and I mean, Adrienne touched on it before. We come from mortgages, and also I suppose most anyone that's not a fintech, still have very quite manual processes in terms of assessing. When we talk about us, we've lent $2 billion and it's tens of thousands of business customers. We've got all that data. So we've got the range of data for all these businesses that come in to apply for lending. We provide the funding and then we get their payment performance information. All of that data stores into the credit decision engine. So it's all real time, it's updated per day, per every settlement, per every payment that comes back in. So that wealth of data is what helps us decide who we lend to and who we can lend to within our credit decision engine. So it takes into account 450 different data points. It's very quick in terms of it can populate a decision, a risk-based decision for a business that we're doing an application for. It populates the decision in basically 15 seconds. And in terms of our, coming out of this side and looking at our book performance, it makes the right decision. So I was touching on Adrienne and I coming from mortgages going, and it was me, the skeptic, going, oh, how does this credit decision engine know? How does it know? But it's all data, it's non-biased, it doesn't matter if it's had it's not dependent on whether it's had a bad night or a bad day or had sleep or no sleep or, or anything like that. It's all data driven. And then we've got credit managers who come over the top and do sanity checks and that we can work through and just double check that credit decision engine, I suppose, and tweak a few things. But instead of a credit manager sitting there for maybe 2 hours doing an assessment, this populates an answer in 15 seconds, risk rating and pricing, and then our credit managers really only have to spend 10, 15 minutes on it to just do that sanity check and get the offer out to the customer. So it's scalable. We can get 10 applications in today or 100 applications in today, and we can decision them within 24 hours all the time. Amazing.
No, that's very, sorry, go on.
Sorry, and that enables us to help more customers. So we have a risk-based pricing model, and that really enables us to say yes more often. So we have a very high approval rate. So our approval rate sits up in the early 70s. And really, when we've got an approval with a customer, over 85% of the time, they convert to settlement. So they're very high percentages because we actually know what businesses want and what they need. And then we will only lend to them what they can afford, and which is why we look at that individual business.
Yeah, that's a couple of very interesting points which I want to go into a bit more. And I think we were talking about this before around, I guess, the balance between that human touch versus technology and doing things online. Obviously, you being an online only lender, that's your primary channel of acquisition and interaction. But then I heard some of you talking about speaking to real customers and having a real person behind the scenes making some of the decisions as well. How do you see that developing going forward? I mean, there's lots of talk about AI and AI being, taking over all our jobs and that sort of conversation. I still think there's a big place for the human touch. What's your perspective on that topic in terms of how with regard to your business model, but also in general, the balance between human and data and online?
I agree, absolutely. And I mean, I don't talk from Australia and New Zealand's point of view, but we love people. What we do and how we do business, how we talk to people, we interact with people, and we love that. It's interesting that you asked that one. So I've just come back from Sydney. I've just been over there on a leadership strategy course or session, and we were talking about this exactly. So we're online, but we do have a person that still talks to the customer. We still talk them through the contract. We still talk them through what we can afford to lend them and what they can borrow. But we're increasingly looking at tools, and again, you're talking about innovation, but to be able to do a straight through process. So without taking that person out, but there'll always be a need for that person. And for us, that's not taking people out. That's actually giving us more scale. And we really see that as in the, maybe you've got someone that just wants to borrow 10,000 or 25,000. So it won't be the 300,000 customer that wants to talk to someone and that they have a lot more high touch process. It'll be the smaller customer that maybe that's all they're looking for over a short term. Our loan terms only go out to 24 months in New Zealand, and on average it's about 12 months. So if you've got someone looking for 10,000 or 20,000 of a 6-month term or a 12-month term, they're probably happy to go through straight online. particularly existing customers. As I said, 70% of our customers do come back for more lending. We nurture them and we work with them. So maybe they've already been in the business for 12 months and they need a top up, and they'll be happy to go through online. So we're working through that now.
Sure.
I just want to add a couple of things to that too. So in terms of scalability, in terms of AI versus human contact, I mean, every lender that's going to see this knows that timeframes have blown out in every business. So we don't get that because of the technology. And so what happens is, instead of us having to plug gaps in the front because the process is delayed, we've got other people in the back. So there's a whole range of IT engineers that have to keep our CDE running and build the new technology and keep all that going. So instead of filling gaps, we're actually employing a whole lot of people on the other side. And also in our marketing second to none. So we just employ people in different areas, and every single one of our customers can actually get a dedicated relationship manager. So no customer is going to ring and say they can't get in touch with Prospa to find out what's happening, they need relief or anything like that, because they've got relationship managers. So that's a whole team of people that we employ that maybe we wouldn't have the resource to do so if we're plugging holes in the front without the seamless technology. And just one other thing about Prospa, which is quite amazing. So generally phone sales, people don't like their staff to stay on the phone too long because it means you're not talking to enough people. But we just had an award for someone the other day, and it was the number of hours that person spent on the phone talking to customers. So it's unreal. So it's like that encouragement to spend the time and get to know the customers and go through the bits, and just so they have their that's a measure for our salespeople to spend that time on the phone and actually get to know that customer properly. Yeah, which I thought was amazing.
Yeah, that's a very interesting point. I think it comes back to the broader point here, which is businesses and customers still need that human touch, and they need just to know that there's a person behind the screen. And I mean, we've seen this in our broader research as well. As much as you kind of push for digital, there's always an underlying need for a relationship manager, advice, and flexibility in the conversations, which I think you miss out if you've got a very straight through kind of process without the channel flexibility. Just a point on that, and a question for you guys on that. It's how do you think through those customer relationships? Like, what do you typically see your customers wanting to talk about when it comes to lending, and then when it's a more of a in-person conversation? Like, what are the kind of key concern areas, and what do you tend to advise on? And I'm just curious and interested in the types of conversations you are having.
Yeah, I'll say two things to that, and then Huia can expand on it. But that's funny. So it was different when we launched in New Zealand. So I said we're 9 years old in Australia, 2.5 years old here. So when we launched in New Zealand, we leverage head office and the agents and the process over there. And the key difference between Australia and New Zealand is the New Zealand customers wanted to have a chat. So the calls were longer. So they couldn't get through as many deals because they wanted to have a chat and they wanted to talk about, and we want to build that rapport. So as I said earlier, people love people, and that's how we work. So they want to talk about the rugby, and so all of our Australians had to upskill on rugby to be able to contribute to that conversation. So that's key. I think it's just building that relationship and building a rapport, so a personal part of it. And then when it comes to lending, we really focus on, so as I said, our average loan size is 35. It's actually higher coming out of COVID, so we're probably in the 50,000. But we really focus on the customer's needs. What do they need the funds for? So it's that use of funds, and to the ability to repay. So we go through the monthly repayments. We look at their cash flow. We actually know what they can repay, and that's what we focus on. So they can afford to repay that amount. This is what they want the funds for, and then what are they going to do with it? And as I said, we do it very quickly. So then we work with the customer, and we work with them. They get a dedicated account manager, and it's the same person through the life of the loan. And then they have that person that will work with them on their repayments, on their future, what else they're doing. So that's really the conversations that we're having. Got anything else to add to that, Huia?
A couple of things, really, just that, every business owner, their business is their baby, it's their baby and it's their passion. So really, when they're talking about their business, they're just giving us every facet of what it is that drives them, I suppose, and what they're coming to us for. And sometimes they feel, you know, you hear them and sometimes they feel bad because they're in this position, but, you know, I don't know, they're just amazing. They just talk about their business and they really want us to understand what they're coming to us for. And yeah, the conversations are amazing. And also on the other side, I mean, I'll say this, but it's a bit cheeky. So we get the customer feedback after they've come in to do an application and they're settled, and the feedback's phenomenal. So anyone can go and check it out on Trustpilot New Zealand Prospa, and it's huge, the amount of customers that come back and give us feedback. So one that we got today was this is the exact words: Prospa had no obligation to help us, but their willingness to help was truly appreciated. Fantastic service. I work for a large bank, often within their business banking division, and we could learn from your customer service model.
Brilliant.
I mean, but that's just one. So if we think about, even Adrienne and I, we're kind of dealing with an outside group trying to email, and just the response back is slow. I mean, pick up the phone and try and ring your communications provider. Well, I shouldn't go, but you know, the customer service and the communication is poor. So people are used to that. I think we were talking about how people are used to that type of service in different places, but which is why they're so blown away when they come to us and actually get the help they need and easily and quickly. And I think it talks to Adrienne, going back to our founders, as well as quick, fast access to funds. Part of their thing was about making it actually a great experience for the business owners as well, because yeah, you'd be hard pressed to find good service as a business owner, I think.
Yeah, no, that's a very, very important point, and it's again great to hear the direct feedback from the customers. And I think this is what we tend to miss, and I've certainly learned from this conversation that you're doing so much to be at the forefront in terms of the customer experience. You're not just an online lender, you're supporting through other channels as well. And I think that holistic kind of channel engagement is really, really important, and obviously relates back to the point about you getting a lot of return customers as well, and your scores on Trustpilot, they're sort of indicative of that as well. So yeah, really, really interesting and great to hear. I'm going to change tack with one of our final questions now. The summit here today, there's lots of conversation about sustainability, and I think, you know, me being based in Singapore and in Asia, I've seen this with some of the banks in the region and financial services providers. There's lots of focus of sustainability at the moment, green financing, you know, what sort of carbon footprint do the businesses have. There's lots of talk about it, but you know, in terms of action as well, we're starting to see that happening as well. So I wanted to get your perspective around sustainability in financial services and more generally, and what you're doing at the moment, or how you think about that topic area as Prospa.
Taking that one, Huia?
Yeah. I think we looked at it, and we thought we'd just bring it back to as simple as always with regard to our customers. So even looking at our actual process, so we pick up the phone, we call our customer, we talk to them over the phone, everything's recorded, so that's all online. We send them a link and we get their business bank, you know, bank statement information, so that comes through. We submit that to the credit decision engine, we get the offer, and then we'll call the customer, and if they're happy to go ahead with the application or with the offer that we've provided, we then email out the documents so that they can sign up on their computer or their phone. So in terms of being green and paperless, that extends in our business, so everything's online. We provide our partners with dashboards and things like that, and marketing tools all online, all paperless, and also our customer experience is also quite paperless. So in terms of that carbon footprint, ours would be very, very low as a business, internally, and also for our customers.
So we struggle to answer it really. I mean, we lend to small businesses, which 97% being the backbone of the New Zealand economy. But then we're like, we don't do big corporates. So like we don't lend to petrol companies and other big corporates. We lend to small businesses, and we're completely digital and completely, it's seamless. As Huia said, the carbon footprint is very low. It's all done digitally.
Yeah, that's very. It's really good to see that. Fundamentally, your business model is geared towards sustainability. And I recall this point about we did this study of customers in the Asian markets, and it was for one of the major banks, and they're very focused on sustainability and really promote it externally. But then one of their customers was talking about the fact that if you go online and you need to get physical statements, they send you like a 40-page printout with mostly blank pages. So a bank that's talking about, and I won't name which bank this is, obviously, a bank that's talking about sustainability, but then their back end doesn't reflect that. So it's really good to kind of hear you talk about that end-to-end, the way you do your business every day being focused on digital. And I think that's critical towards what we mean by sustainability.
Yeah, that's right. And no trees are killed here.
Yeah, exactly right. All right, I think we're just about around time for this conversation. Look, it's been fantastic. I've learned a lot from this conversation. It's really exciting to hear about what Prospa is doing. I wish you all the best of success, and I'll speak to you all very soon. Thank you very much.
Thank you. Thank you for the opportunity, and we're very excited about the future.